Welcome to Marcor Studios, where here we will be interviewing different industry professionals and educating our homeowners as well as the industry as a whole. We hope you enjoy the show. All right, welcome to Marcor Studios. We are here today with Justin Manfredo from Legacy Concepts. Thank you for being here today.
Thank you for having me.
Of course. So talk to us. What do you do? You are a financial advisor, but that is a loaded title. What is involved with what you do?
That's a tough question to answer. I do a little bit of everything. So financial planning is the basis of very important retirement planning. We do a lot for business owners like yourself. We help out with individual planning. So I would say the start, though, of any type of financial planning is making sure you have the right amount of life insurance, just because we can come up with the best financial plan that's out there. But if something happens to you tomorrow, that plan that you're supposed to be funding for next year, the year after, if no one's there to fund it, then life insurance is important to leave behind to your loved ones, or help build a legacy, or leave a business behind.
All right. Well, talk to me from a bit. Well, we're young. At least I am. Just kidding. But I just like to break your chops. You know that. So ultimately, I got my degree in finance, and I remember the best thing was the personal finance professor that I had. He'd always told us, when you get your paycheck, you divide it in three. You pay yourself a third to cover your bills, a third for your future, and a third for now. Would you, for spending, would you say that that's a good mentality to cover?
Yeah, I mean, so we always say pay yourself first. You know, the bills obviously you want to pay as well, but you always have to put something aside for yourself, because the crazy part about working and retirement is you can work from being 25 years old for 40 years to 65, but then you could actually be in retirement for 30 to 40 years as well. So if you retire at 65 and you live into 90 or 95, that's 30 years of income that's not coming in.
Correct.
You know, depending on Social Security, but obviously that's not equal to what you're making now. If it will even be there in the future, I'm sure it will, but who knows? And then, so you're going to need to start taking from your 401ks or any type of investments that you have in the future to make sure that you're going to have enough income for retirement. So a lot of people don't realize that for all the years that you've actually worked, you can be in retirement for that long as well.
Yeah, that's a crazy, it's a crazy thought when you actually put the numbers to how many years you're working versus not working, and how much money you really need to put away for the future.
Exactly.
But now, when it comes to our age group, how many people have don't even do anything with this yet?
So, well, our age group, we're getting a little older, right? So I would say it takes a while for people to start understanding the importance of putting money to the side, and even getting themselves life insurance or any type of retirement planning, because in today's day and age, bills are expensive, especially living here in Long Island with all of the expenses. I mean, you need to have a 6-digit salary nowadays just to live off of, and that's not even sometimes comfortably. So what we try to do is tell everyone at the youngest they can start, whether it's $50 a month, $100 a month, just start something where it starts automatically coming out of your checking account, and then they'll get used to that money coming out, and eventually that nest egg or that amount that you're putting away is going to lead to something.
And it'll grow and start to...
Yeah, and then the other thing is when you get your tax returns back, or you get a bonus at work or a salary increase, you always want to take a percentage of that and put it towards yourself.
But how many people do you see in our generation, or maybe as we're getting a little older, we see it a little more, but in your 20s and, maybe early to mid 30s, how many people, those are the ideal times to start. When I started my stuff, I was in my early 20s. When A, it's cheaper then. B, you're going to have a longer time that you're putting money into it. But do you see a lot of people that come to you middle-aged that just have nothing yet?
Yeah, we see it quite often, actually.
That's scary.
And not even that. Sometimes they'll put money in 401ks and they won't even know how much money's in there or where it's invested. Yeah. And it will be with old companies. And that's one of the worst things that you can do, is leave an old 401k with an old company, because you don't realize that you're at such a disadvantage by keeping it at an old company. Reason I say that is that company is now in control as to where your money is. And what I mean by that is today they might be invested in Fidelity, but the old company that they worked for might want to change to Vanguard tomorrow. So if they change to Vanguard tomorrow, you have no control as to where that money's invested. You're now invested with Vanguard.
Yeah, that's a very good point.
The other downside of that is they typically only give you 15 to 20 funds to choose from, where if you roll that old 401k into an IRA, it's now in your name. You choose where the money's invested, and you could choose as many funds as you'd like. So we have thousands of funds inside of an IRA where you're not just being forced to select 15 to 20. And then on top of that, depending where you are in age and what type of investments you like, or how aggressive or conservative you want to be, there's investments out there that give downside protection on some of their investments.
Meaning you kind of have like a stop loss. You're not going to lose money if the market were to crash.
Correct. You'll lose some, but a certain percentage.
Yeah.
And you can't offer those in 401ks. So when you roll it over into an IRA, you now have a lot more funding options. You can have some protection on the downside, especially in today's market where it's so volatile. It makes sense to have some sort of downside protection.
So talking from a business owner standpoint, what would you recommend to different business owners that maybe are, some people think, oh, well, I don't have a big company. I only have 5, 10 people, or maybe they have 50 people, or there's so many benefits as a business owner to be able to pull in, things like keyman insurance, things like, opening up a 401k. Can you explain what keyman insurance is and like what are good things for you to do as a business owner?
Sure. So one of the benefits of my firm is we have specialists in everything. So I like being the quarterback and the relationship type of person where I'll come and I'll sit down with a business owner and I'll see what the most important need is for their business. Yeah. So when you say keyman or buy-sell agreements, there's so many different things that a business owner can do. And sometimes when you're working with certain financial advisors or financial planners, they're specialists in one area. So they try to take that one area and force it into every type of, situation they're in. But that's not always means it's makes the most sense for the business owner. So we take a look at a holistic approach and we see what is the most important for you guys. So we sit down one-on-one, we see what kind of goals you want to accomplish, and then we put plans in place, and I'll bring in whatever specialist we need to, whether that's setting up a 401k, whether it's setting up a simple or a SEP IRA because you're a smaller company, whether it's setting up a defined benefit plan because you want to put more money aside than what some plans will offer. As far as keyman, those are important too. And the reason they're so important is if you have one person that's running your business and God forbid something happens to him tomorrow and you can't replace him, what are you going to do? Or it's going to cost a lot of money to replace him that you might not just have sitting in a business account to be able to come up with another person like him. So what we do is we set up a keyman where if something was to happen, such as death, it's not really him leaving, it's something, a freak accident, I guess you can say, that now you're going to take the death benefit of that and you're going to be able to get someone to replace that person. And sometimes it's 2 or 3 people that need to replace that person. So that's why keyman's so important, but it's not for every business because some businesses don't have someone that's that high of importance. When it comes to business planning, I would say one of the most important is buy-sell agreements, where that's where I've seen the most mistakes. And when I say mistakes, where if you have a business owner, whether it's your brother, sister, mom, dad, cousin, maybe someone that you really don't even have a great relationship with, but it's really when you have a really good relationship and you're like, well, it's me and my brother. And if something happens to me, I know he's going to take care of my family. It doesn't even matter. I just know, my family's set. I can't tell you how many times that's not the case.
I'm sure.
Money drives everyone. And the biggest thing about that is if something happens to your brother and you guys are in a business together, your brother's gone and now you have a new business owner and it's his wife or whoever, comes and takes over because they're entitled to 50% of the business. Now you might not have the same morals as that person. You might not work as hard as that person, whatever it is.
They may know nothing about the business.
Exactly. And that's typically what happens. The only thing they really know about the business is their husband or wife coming home and they're talking about the bad things or the good things that happen at work today,
Yep.
but they don't really know the ins and outs of the business. So when you have a buy-sell agreement, what you're able to do is if your partner passes away, whatever the business is worth, his 50% of that, you're able to give them the life insurance aspect of it or portion of it, and that buys them out. And now you're the owner of the business, sole owner of the business. So
it's like you're buying out the significant other at that point.
Correct.
You're buying the family out of it, but you have basically a life insurance policy on one another to do so.
Correct. So if your business is worth 10 million, again, just using easy numbers, you're worth 5, I'm worth 5. And then if I was to pass away, you would have a life insurance policy on me. My wife would come in and you'd give her the $5 million that the life insurance just left out. So now you're sole owner of the business and you don't have to worry about going into business with my wife, who you guys might not get along. In this situation, you and my wife can get along.
I happen to love her, but
but yeah, so buy sells are very important. Defined benefit plans, I would say, are very important. And the benefits of those are just the tax deferral, or there's ways that you can get money tax-free. So we try to, again, sit down with the owner, see what the most important thing that they're looking for is, and then we set up a plan in place for them.
So now on a small business like what we have here, let's say, and I know we're a larger small business, but is there a way for you to set up an employee, let's say, and I think a lot of companies wonder the same thing. Owners can set themselves up and say, okay, I want to retire by X, and they can back into what that number is, right? What about an employee? Can they set those types of goals for themselves as well?
So yeah, they can. And we set up plans for them as well. Sometimes with the business owner, there's ways that we do exactly what you just said. That, hey, if this guy stays with us for it, it's a retention thing, that if he stays with us for 20 years, how much money can he generate, whether it's through an investment, a life insurance policy that builds up cash value, how much money can he generate in retirement for himself? We really appreciate him working here. We want him to stay here. So as a business owner, there's different types of plans that you can open up on one of your employees to accomplish that goal.
And so basically everybody has that opportunity to grow and back into it. It's just not knowing to ask the questions or not knowing to start early enough in life.
Well, that too, but also making sure that the employer wants to set something up like that. Now, as far as employees, yeah, they can always set up an individual plan. It doesn't always have to be through the business.
Okay.
And that's what we mostly do. We sit down with employees and we'll go over what their goals are. When do they plan on retiring?
Yeah.
What have they done for retirement? If they're contributing to a 401k, we can project what it's going to be at age 65 at a certain return.
And maybe they want to increase from, maybe they're putting 4%, maybe they want to put 10% or 8%.
Correct,
and be able
exactly.
to scale up to that.
So, and we're able to actually put that number in there. So we use a system called eMoney that will show that, hey, at age 65, based on the 4% that you're giving, putting in now at a 6% return, this is what it's going to equal. But then we'll also go a step further and say, these are what your budget is,
Yeah.
or based on what you're paying today and a cost of living adjustment, you're going to need to come up with B. And right now your investments are coming up with A.
Yeah.
So if there's a deficit, we need to find out, how do we fulfill that deficit so you can retire on time? And if there's a surplus, great. What can we do in addition now to what you're contributing to?
Yeah, that makes a lot of sense.
We look at the 3 different tax strategies, where tax deferral, things that you'll be taxed on in the future, tax-free, and then taxable. So all 3 of those, you want to make sure that they're in the right place.
Okay. So as far as when it comes to, let's just touch on the last important thing, is kids. Kids come into the picture, the whole world changes. Obviously, you want to increase your life insurance, and then you throw the 529s in. And then, we've had conversations in the past about insuring your children at a young age, and people kind of look at it like, you look at it a little crooked, but you're like, no, this makes sense. They're younger. Their premiums are lower. They're healthier. They don't have, maybe, God forbid, an autoimmune or things like that. Explain the benefits of starting your kids out and setting your kids up financially.
So setting them up, there's a couple things that you can do. One is a life insurance policy that obviously we have talked about and set up. What I like doing in those are whole life policies called 10 pays or 15 pays. And what that is, it just says, hey, for the next 10 years, you're going to pay a larger premium than what you normally would, or 15-year pay is 15 years of a larger premium, but then you're guaranteed to stop paying for it. And the reason you do that is you fund it up front, and then it's going to continue to grow with a lot more money inside the account, and it generates tax-free income. So it's one idea where a lot of people just look at life insurance as a death benefit, but it really isn't. It allows you to grow tax-free income for the future.
So you're literally paying that for the next 10 or 15 years. You hold that money. It's not like it's a term policy where it's over after that 10th or 15th year. They hold that, and that's just going to keep growing more money and more money in the market.
Yes.
You stop paying that premium, but your kid still has that life insurance.
Yes. So
that's amazing. Like it's a great opportunity and a great avenue to set your kids up. I mean, we've had those conversations too. Like these kids are not going to be able to live on Long Island and stay close to us if we don't start setting them up now too.
Yeah, absolutely. So a couple other ways besides just the life insurance plan that we can start building for them. 529 plans are great, but really just works for college planning. But there's a couple other ideas, and again, everyone's different. So when we do financial planning, it's not a one size fits all type of mentality. It's we need to sit down one-on-one and really see what it is that you're looking for and what it is that you can accomplish.
Yeah.
But definitely a couple great ideas for, setting up the kids on a whole life plan that will grow tax-free. There's also plans called Index Universal Life Plans that they work out, really good as well. But you can't structure it with the 10 or the 15 pay on those. So typically with younger children, the premiums are going to be a lot cheaper. Okay. So the younger you can start it, the better. The other benefit that we don't really think about because our kids are so young is their health. What happens if their health changes at a young age?
Yeah, I mean, we ran through it with my daughter, and you were the one who said, before you take her to the doctor, we might want to up this. And it was the best advice you gave me because I have no control over that. And all of a sudden she's 25 and now she can't get what she could have gotten now. But nobody thinks about that now, it's scary stuff.
So the person who actually hired me into this business, he always talked to us about doing that. And the reason for that is he had a son that ended up being type 1 diabetic out of nowhere, athletic, young, never thought anything was wrong with him, collapsed on a basketball court, and then found out he's a type 1 diabetic. So being a type 1 diabetic at such a young age is tough to get insurance in the future.
Yeah.
So thank God his dad opened up this big life insurance plan when he was younger, because now in the future, forget about the tax-free income aspect of it, that's why his dad set it up originally. But now when he has kids, this is going to be one of the only life insurance policies he can get. So now the death benefit's actually more important in this situation because he might not be able to get a policy in the future.
Yeah, and I think that's where people think about life insurance only from a death benefit standpoint. Nobody realizes that there's an investment strategy to it. So if you had any bit of advice for business owners, as far as finances, what would be your best bit of advice?
So for business owners and finance, like I said, the number one thing is you want to see who your partners are and make sure you have a right buy-sell agreement. Let's say you're just a sole owner. You want to make sure that you're getting enough tax deductions to build of income for the future. So whether, again, that's setting up through a 401k, a SEP IRA, simple IRA, defined benefit plan. So you really just need to sit down with a planner to find out what's going to make the most sense for you as a business. Whether it's a C Corp, S Corp, each one allows different types of
deductions and benefits.
Yeah, deductions. So you want to make sure that you're really maximizing the deductions and that you can afford that.
So now if somebody wanted to sit down and go over their finances with you, how do they get in touch with you?
So either through email or cell phone. I would say the cell phone is the best way to get in contact with me, or my email.
Okay.
And then we set up a consultation. It's a free consultation. We sit down again. We'll go over what the business is doing, how the business is set up, and then we'll come up with a game plan.
All right. So Life Legacy Concepts, we can reach you at what number?
So it's 631-902-6713.
And the email?
Email is jmanfredo, MANFREDO, at Barnum, BARNUMFG.com.
Right.
So BarnumFG.com.
I could say, naturally, I would bring my financial advisor in here because he's done wonders for us. And really, I mean, we came from a not so great situation that I thought I was doing okay. because I saw a return, and then I switched my stuff to you and was like, wait, I could have been doing this all along. So definitely give him a call and see what he could do for you.
Thank you. Appreciate you having me on here.
Absolutely. Thanks for coming.